Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at how the US E-minis unfolded yesterday, which was Monday, February the 2nd, particularly following on from our training we're doing in our live training webinar using the higher degree DPs to look for the higher time frame trend. So I just want to show you how we do this in MTPredictor. Very easy to do is that initially we used to have our STF color indicator here for our large degree trend, but like all indicators it's lagging. So we want to have something that's leading, in other words giving us support and resistance on the chart in advance. So for this we go to our higher time frame chart. So for a 3-minute chart we go to a 15-minute chart. If you're doing a daily chart, you go to a weekly. Say you're trading Forex on 15-minute charts, you go to the hourly. So for this, we go back to the last major swing pivot, and we did this live in our webinar yesterday. So we'd go back to this pivot low here. You can see it clearly marked on the chart. If I zoom out a bit, which was the low of the day for the 29th. If you right mouse click, place your DP level on the chart. Now the beauty of these DP levels is they are leading indicators. They are on the chart in advance. So before yesterday even opened, in other words before the market even opened yesterday, you'd have had this support on your chart. And just look what the market did. It came down, hit this level absolutely beautifully, and you see that nailed the very low of the day for you. So in other words, you had a support zone on your chart that caught the very low of the day, but that support zone was there before the market even opened. Let's go down to a 3-minute chart and see how it looks. As you can see, caught the low of the day absolutely perfectly. The market then rallied up but didn't rally up into anywhere. Again, we go back to the last swing pivot, this time on the 3-minute chart. You can see there's the last swing into the low, clearly indicated on our chart there. We right mouse click, put our DP on, and that's the level, again in advance, where we're anticipating resistance to come in. And as you can see, the market turned right at that level perfectly, and then started to decline down. But that's only a short-term resistance area because it's on the same time frame. The major resistance area is this 15-minute DP here. Now, because this is 15-minute support, our large degree trend is now up. It's now up into our next target. So if I go back to the 15-minute chart, as the market is rallying up here, we'd have a target off this level up here. Now there will be a lower target here a bit later once this decline is completed, but before this decline had actually unfolded, this would have been our initial target. So the large degree trend would have been up between these levels. So again, on the 3-minute chart, what you'd have been looking at, if I look this down here, is that's our large degree resistance, this is our large degree support, our large degree trend is now up. Therefore we'll be looking for buy setups. Now this is a great example of position sizing at work here, and a lot of amateur traders say the only way to make money is to have more winning trades than losers, and I want to show you how that's actually not true. It's not true because if you keep your losses small and have big profits, then you can make money even if you make losing trades, which actually is what most professionals tend to do. There was our initial buy setup here as deemed by our history triangle. This would have actually just clipped you in, then taken you out. So that would have been a -1 hour loss. We then had, I'll just clear the analysis off. We then had another buy setup here. This actually went through the 100% initial risk level and was rallying nicely, so you may have actually got your stop to break even. But let's take a worst case scenario. Let's say that you didn't, and let's say you're stopped out for another -1 hour loss. So that's 2 losing trades. There was another history triangle down here. So again, let's say you actually bought that because you knew the large degree trend was up. That would have just been clipped out just by a tick or so. So there you were down at this level here, and you'd had 1, 2, 3 losing trades. Now comes the beauty of position sizing, because here we have our next DP buy here, and this one here actually went up to its first target, where a profit of 4.5 R was available. In other words, this profit here was 4.5 times greater than the initial risks. So even though you'd have had 1, 2, 3 losing trades and only 1 profitable trade, the losses would have only been -3 R, -1, -1, -1, and the profit would have been plus 4.5 R, so you'd have actually made money overall. In other words, a plus 1.5 R profit overall. Now that is a really good example of of how position sizing really helps, and it's actually a lot easier trading not having to get a high number of winning trades, because if you do that, your trades have to be taken quickly. In other words, the profits have to be small. So in other words, you have lots of small winning trades, you then have one big loss and it wipes you out. It's actually even though psychologically it seems a better way to trade, actually in reality it's actually a lot harder to make money doing it that way. It's far better to have big profits, and then you're not reliant on making a high percentage of winning trades, which actually is difficult to do. So a great example there of how position sizing would have helped make you money overall. But that's not the end of the story, because if we go, I'll just take this analysis off. If we go back to the 15-minute chart, remember I said that once this pivot had completed, you could then place another DP off this level here. So back on the 15-minute chart, you'd have gone up and said that's our now minor or slightly smaller larger degree resistance area. So let's see what difference that would have made on our 3-minute chart. And you can see it's up there above where our first target was. In other words, it's above where our first profit target was. So as a more experienced trader, you'd have said, well, actually we need to run this into our next target. So let's grab this, take this up, and then suddenly your 4.5 hour profit turns into 8.4. So in other words, the profit is much, much larger. And then suddenly your -1, -1, -1 or -3 hour loss earlier looks pretty insignificant to a plus 8.4 hour profit. If you wanted to be really aggressive and still think that the first higher degree target up there would have been the one to go for, you could have run it right into the close where the profit would have been, well, quite a massive 12 hour. But let's take the lower scenario here of around about 8 hour profit. So overall it was a good day yesterday. It was a good day because we defined the large degree trend, and if we go back and look at this, what a brilliant support level to have on your chart there, which actually nailed the very low of the day for you. That defined the trend is up. We were then looking for buy setups, kept the losses small on the initial ones, but then had a very nice profitable trade going up there later in the day. Remember, because the large degree trend was up, we wouldn't be looking at these sell setups. Same kind of thing happened on the YM. There's the YM where again, if I go out to the 15-minute chart plus the DP on this last pivot, you can just see how well that caught the low of the day there. Look at that, absolutely nailed that absolutely perfectly. And if we go back to the 3-minute chart, again, large degree trend would be up. In this case, it would be a little bit better than the ES because there would only been one losing trade here earlier, then a TS3 buy setup with a plus 4.2 hour profit at the first target. Again, if you're looking to run this, that would be up to about 7 hour profits up there. And in fact, actually, this would have been a holy grail trade setup because you had the large degree support, initial rally up, initial correction unfolding as an ABC, a wave 2. So you'd be looking to play this up into the typical wave 3 WPT. Didn't reach there, on close would have been near a 7 hour. So another good profit. Same thing with the NQ. Similar to the ES, where you had some losing trades to start with and then a very nice DP buy a bit later on at the first pivot there, 5.5 hour as well. So either way, it was a good day on the ES, YM and NQ yesterday, particularly when you look at the large degree trend, and that's what we encourage all MTPredictor customers to do, to place the large degree support and resistance zones on your chart. Remember, they're there in advance, leading indicators. That helps define the large degree trend. You then look to trade in the direction of that trend. Position sizing keeps your losses small and keeps your profits large. As you can see here, nice 8.2 hour profit towards the end of the day, and that's what made money overall yesterday for MTPredictor on the E-minis. So a good example of different things unfolding yesterday for MTPredictor, and a good day overall on the US E-minis.